Channel, this is Jason, certified financial planner and host of Fighting Words Financial. Yeah, I know, that wasn't such a clever thumbnail, but honestly, I'm such a dork I just couldn't resist. In this video today, I'm going to talk about the Chinese automaker BYD. The name stands for Build Your Dreams, and BYD is essentially the 800-pound gorilla in the Chinese electric vehicle world. Many Neo and Xpeng investors simply don't want to talk about it, but today we are. We're going to talk about why BYD is probably in the strongest position to thrive and to survive the eventual and inevitable shakeout of Chinese electric vehicle companies that's probably going to start occurring sometime in the next 5 to 10 years. We'll also dive into how this company actually fits into everything that we already know about the companies that Warren Buffett chooses to invest in. This is not an atypical investment for him at all. There's actually so much to talk about, so much going on when it comes to BYD that there's no way that anyone could cover it all in one video, so I'm not even going to try. I'm going to just talk about a few points that are maybe not so obvious to someone who hasn't taken a really good hard look at this company. And I'll cover the two real reasons that I think Warren Buffett is interested in this company, and I'll give you a hint, it isn't actually BYD's line of electric vehicles. Right off the bat, I should say that there probably needs to be a little clarification on how BYD trades on the US stock market. It can be a little bit confusing for newcomers. Buying Neo and Xpeng is pretty straightforward, but buying BYD is not, and many people are a little confused about which ticker they should buy. The company actually trades under two different ticker symbols in the over-the-counter market. It can seem a little confusing, but here are the basics. The ticker symbols are BYDDF and BYDDY. Both are over the counter, but BYDDY is the ADR or American Depository Receipt, and BYDDF is a Class 8 share. There is a difference between the 8 share and the ADR, but to be frank, it is a whole separate video, and I'm not going to go into it very deeply. Suffice it to say that the distinction between the two was far more important a decade ago when foreign trading desks, lot size limitations, and large trading commissions were more of a thing. Today, most people can buy either BYDDY or BYDDF without really large trading commissions and without any of the other considerations from a decade ago. Typically, BYDDY will trade at roughly twice the value of BYDDF. It's all the same company though. It's kind of confusing, but you can likely own either one of them if you choose, and if you aren't concerned with voting rights, it probably doesn't matter which one. There has been a lot going on in the EV world lately, and to some degree, BYD is a little bit overlooked, although I can't figure out why. There's been a lot of good news from this company lately. BYD released a monstrous third quarter earnings report where net income was up 781% year over year. 781% year over year, and earnings per share was up 3,000% year over year. Also, the clarification of China's ambitious 5-year plan released last week was really good news for Neo. Domestic production of new energy vehicles and technology is central to China's economic development plans over the next 5 to 15 years. And BYD is going to be a big part of the electric vehicle revolution, not just in China, but worldwide. Let's be clear, the electric vehicle revolution and the sustainable energy revolution has already begun, and I don't think it can be stopped. And I don't think that that statement can reasonably be disputed anymore. That doesn't stop a lot of people from contacting me and presenting some really tired and outdated arguments telling me that I'm wrong about all this. They tell me that folks are never going to give up their gas guzzlers and their diesel trucks, but I'm here to tell you folks, you're wrong and you don't look clever. You look a lot how like buggy whip and carriage manufacturers must have looked like in the 1920s when they claimed that the automobile was just a fad for bored rich people. You may not see it yet, but you're already going the way of the dinosaurs. My warning to you is that especially if you are a young person working in the oil industry or the auto service industry, you had better start thinking about ways to evolve because your job is probably going to go extinct. I don't think that I can be any clearer about my opinion regarding the prospects of internal combustion engine related employment. Look, Tesla lit the fire, but the rest of the world has adopted the EV revolution as their own, and we are no longer even the leaders in EV adoption, and BYD is a really big part of it. China and Europe collectively account for 84% of global electric vehicle sales. Just ignore the USA for a moment and admit that we are an ethnocentric society only concerned with what goes on in our little slice of the planet, and we are woefully shielded from news regarding macroeconomic trends across oceans. Stop thinking for a moment that companies that receive the most positive press in the US, like Tesla and Neo, are the only players in the game. Both companies make really fantastic electric cars, and I don't have anything negative to say about them. But there are massive players like BYD already selling electric vehicles in virtually every vehicle class and most market sectors that get virtually no coverage in the mainstream media. Both NIO and XPeng make electric cars that are selling really well in China, and they get a lot of press coverage, and they're both expected to enter European markets soon. Still, they only make cars. BYD is currently the only company on the planet that makes electric vehicles of all classes. BYD has electric commercial vehicles in 10 market segments: buses, coaches, taxis, logistics, construction, sanitation vehicles, vehicles for warehousing, vehicles for ports, airports, and mining operations. This is in addition to its 14 models of electric passenger vehicles. This isn't even the most important thing to understand about BYD, and cars are not the real reason that Warren Buffett was eager to invest in this company when it wasn't really on anyone else's radar. I don't think that Warren Buffett really cares that much about BYD's electric cars. I think he cares about the electric vehicle parts that BYD manufactures. So let's take a step back now. Let's remember that Warren Buffett's investment philosophy has been known for a very long time. He told us all about it in a shareholder meeting way back in 1995. This is how Warren Buffett chooses to invest. And I'm going to quote him here. "What we're trying to do," he said, answering a question from the audience, "is we're trying to find a business with a wide and long-lasting moat around it, surrounding, protecting a terrific economic castle with an honest lord in charge of the castle." He then went on to explain some key traits that a company with a moat must have. What we're trying to find is a business that for one reason or another, it can be because it's a low-cost producer in some area, it can be because it has a natural franchise because of surface capabilities, it could be because of its position in the consumer's mind, it can be because of a technological advantage, or any kind of reason at all that has this moat around it. BYD fits this description of a company that Warren Buffett would be interested in perfectly. And to understand why, perhaps a historical example would be best to illustrate it. I wonder if folks watching this video are familiar with the story of Levi Strauss & Company, how jeans came to be a thing that most people on the planet have at least worn once at some point. Levi Strauss & Company traces its origins to San Francisco in 1850 during the California Gold Rush. At some point, Mr. Strauss decided that the dangerous and dirty job of gold mining was not for him, and he got into selling dry goods to the miners. One day he heard of the miners' need for durable pants. Mr. Strauss then went out and hired a tailor to make garments out of tent canvas, and later denim was substituted and copper riveting was added to the pocket seams, and thus an iconic product, company, and enduring symbol of Americana was born. BYD in some ways is like the Levi Strauss of the new energy vehicle gold rush. BYD has the ability to fill a need that no other EV company can. It has that deep moat. In fact, BYD has two of them, and it isn't actually the cars they produce. Oh, the cars they produce are just fine, and all of the other electric vehicles they make are anywhere from adequate to excellent, and you can find reviews for the new premium BYD Han sedan online, and by all accounts, the Han EV is a fine luxury car with an attractive price point, but it does lack some of the software features that other EVs in this class promote. I'm actually not going to spend any time at all focused on the cars they sell, because that is not the defining feature that sets BYD apart from its competitors. The first moat, and one of the most important features of BYD, is their battery manufacturing capability. You might not be aware of this, but BYD is actually either the third or fourth largest producer of lithium-ion batteries on the planet. BYD makes all of the batteries for its own vehicles and owns every step of that process, which no other automaker does currently, and only Tesla is really trying to do. In fact, all of Tesla's Battery Day was dedicated to telling investors just like you how Tesla plans to deal with what the industry has long believed is a coming worldwide lithium-ion battery supply crisis that's seriously going to hamper the ability of electric vehicle companies to satisfy demand. Tesla saw this battery shortage coming, BYD saw it coming, and so did Warren Buffett. BYD isn't a car company. Well, it's not just a car company, like Tesla isn't just a car company. And it's already built out much of the manufacturing infrastructure that Tesla aspires to and NIO and XPeng can't even dream of yet. BYD isn't a startup either. The company was founded in 1995 as a high-tech enterprise. It has 229,000 employees worldwide and operates two major subsidiaries, BYD Auto and BYD Electronic. BYD Electronic since 1995 has evolved to become a technology and manufacturing leader in batteries for mobile applications. This has been, and certainly will continue to be, what differentiates BYD from its domestic competition. BYD currently has the cheapest electric vehicle battery in the industry, and it plans to sell its newest battery, the inexpensive lithium iron phosphate blade battery, to other automakers. They plan to not only make their own cars, but to power the electric vehicle revolution with their battery technology. One of the most important advantages of the lithium iron phosphate battery is the fact that it doesn't use either cobalt or nickel in its cathode chemistry, and therefore does not have to deal with the supply constraints or political considerations of obtaining either material. Tesla has also recently committed to producing the China-made Model 3 with a lithium ferrophosphate battery because of supply constraints and the cost of the more standard nickel, cobalt, manganese cathode materials. A second really big advantage of the lithium iron phosphate battery is longevity. According to BYD, the blade battery will withstand between 3,000 and 4,000 charging and discharging cycles, or on the low end, about 1.2 million kilometers of use, which is about 750,000 miles, while still maintaining a capacity of around 80%. Lithium ferrophosphate batteries also allow for really fast charging. You can charge from 10 to 80% in about 33 minutes, and it's one of the safest and most affordable battery types around when compared to the higher energy density chemistries like nickel, cobalt, manganese. To be fair though, lithium ferrophosphate batteries have roughly 14% less energy storage capacity than some of the older battery types. But because BYD's cell-to-pack approach reduces complexity, cost, and increases space utilization and therefore volumetric energy density, BYD really hopes that the blade battery can compete with the nickel, cobalt, manganese battery. The second metaphorical moat that was probably very interesting to Warren Buffett back when they made the first investment probably wasn't that obvious at all at the time and may not be all that obvious to you even now. It is the insulated gate bipolar transistor, or the IGBT. Now bear with me for a moment, folks, because this is actually pretty important. BYD makes two of the most expensive components of an electric vehicle: the battery and the IGBT. Again, BYD is actually the only automaker that can do both. The IGBT is a rather expensive part of the drive unit. It's an integral component of the EV's power management system that's made by BYD Semiconductor, and which is a subsidiary of the BYD parent company. The electric switch is called by industry experts the CPU of the EV because it manages and reduces power loss and improves reliability. It's the second most expensive part of an electric vehicle after the batteries and accounts for somewhere between 7 to 10% of the total cost. IGBTs are expensive and not many companies produce them. And the global market for IGBTs is actually expected to quadruple in the next 5 years. Not just from electric vehicles, there's actually a whole host of other electronic applications. BYD Semiconductor is currently the only Chinese company, not just the only electric vehicle manufacturer that can produce IGBTs independently, and it's 72.3% owned by the parent company BYD Company Limited. BYD is actually rushing to make itself more dominant in the production of IGBTs. In June of 2020, the firm said in the filing that it secured $113 million of funding for its chip-making arm, BYD Semiconductor, to expand manufacturing capabilities. BYD currently has roughly 18% of global market share of IGBT sales and production and is looking to grab a larger slice of that pie. I talk about pie a lot. I like pie. According to a Seeking Alpha article recently published, collectively the two components, the battery and the IGBT, account for somewhere between 38 and 40% of total manufacturing costs for an electric vehicle. But for BYD's newest model, the luxury sedan Han, which supposedly has the performance of a Tesla Model S for the price of a Model 3, Seeking Alpha actually estimates that the IGBT and new blade battery combined cost only comes out to be about 25.4% of the total manufacturing cost. So despite the car's narrower gross margins, that's actually a 33% cost reduction from battery and IGBT costs alone for BYD when compared to the best-selling EV model in the world, the Tesla Model 3. This translates to a 21% improvement in BYD's gross margin. This is huge, folks. If you were to apply a 21% improvement in Tesla's automotive gross margin over the last year, it would have made an additional $1.29 billion in automotive gross profit. This is why Tesla wants to make its own batteries. Manufacturing its own battery cells has always afforded BYD an advantage in its margins, but the new blade battery and BYD Semiconductor's IGBT cut manufacturing costs even more. It's important to remember that the blade battery and the in-house production of IGBTs didn't even really ramp up until Q3 of 2020. Investors can look forward to more margin improvements and higher profits in the future. Also, according to BYD, nearly every automaker that you've ever heard of has already reached out to BYD regarding technical cooperation since the launch of the new blade battery. Almost none of the other automakers produce their own batteries, so BYD has almost limited battery partnership opportunities out there in the future, and especially because it has the cheapest and safest battery in the industry at this point. The new blade battery production line is quickly ramping up in China to meet demand. BYD currently has new blade battery factories in Shenzhen, Shan, Chongqing, and at least 3 other locations. BYD expects battery production capacity will reach 65 gigawatt hours by the end of this year, 75 gigawatt hours in 2021, and 100 gigawatt hours by 2022. Similar to BYD's battery production capacity, its vehicle factories have enough unused capacity to meet future demand. BYD has 4 factories in China with a production capacity of nearly 1.5 million vehicles per year. Right now, BYD is on track to produce about 415,000 vehicles across all powertrains and vehicle types. Its factories are only running at about 30% capacity. Outside of China, BYD has bus factories in Brazil, Canada, the US, and Europe. With China's new 5-year plan targeting urban transportation as a way to curb carbon emissions, BYD looks to be a clear winner here. BYD simply has the available manufacturing capacity to electrify entire cities and entire regions. BYD is such a monster already, and you might not even realize that the company already has a presence in the United States and has a North American headquarters located in Los Angeles. BYD North America has already supplied over 400 electric buses to more than 50 US customers, more than any other electric bus. As the push towards a sustainable energy economy accelerates, you're going to see more of these vehicles on the road despite the higher upfront cost. Electric buses actually have a lower total cost of ownership, and that makes them significantly cheaper to operate over time. BYD is really poised to provide in the new sustainable energy future. BYD may actually be the biggest and most important company that you don't know anything about. The Chinese government's latest 5-year plan makes the message really clear. China wants to be self-reliant and a leader when it comes to green technology innovation. BYD is expected to be a really big part of that plan. The new policy roadmap emphasizes China's targets for new energy vehicle sales and expects these NEVs to make up about 20% of new vehicle sales by 2025 and more than half of sales by 2035. Today, they make up a little bit less than 5% of sales. The policy also pushes for improvements in EV components, more funding for efficient charging and battery swapping networks, and a green vehicle quota system to help legacy car makers transition to these new energy vehicles. This is all necessary if China wants to meet its stated goal of carbon neutrality by 2060. BYD is probably currently the best positioned company in China to dominate the new energy vehicle future, especially when you consider that they're already not just limited to passenger vehicles. They have a massive advantage when it comes to manufacture of 2 critical electric vehicle components. No company in the world already makes more new energy vehicles than BYD does right now, and few companies have the ability or even dreaming of a feat of similar scale. China wants to increase its green technology self-reliance and reduce emissions. BYD already sets the perfect example of how to do exactly that, and it's going to continue to be key in helping the country transition to a new clean energy economy. A decade ago, BYD and Warren Buffett saw the future and prepared for it, and now everyone else is just playing catch-up when it comes to battery and IGBT manufacturing. You know, sure, Tesla is really due credit for striking gold with the electric car, but I'm telling you that because of how BYD has positioned themselves to provide these 2 critical and expensive components for electric vehicles, BYD has really set themselves up to be the Levi Strauss of the new global energy vehicle gold rush. Anyway, folks, these are just my thoughts. You can tell me how wrong I am in the comments below. I look forward to seeing you next time. Thank you.